Hey everyone, Nick here on the 28th. A few ideas or a few comments about the price action these days, and to help people that are trying to trade alone. First of all, try not to trade alone. We trade in a group. We're lucky to have 330 to 350 people every day having the time to hang out, but you don't need to, as long as you're getting the ideas from the group or at least getting the behaviors. So I'll tell you what we're finding out, and then maybe it'll help you trade. If you like the video, give it a like and subscribe to the channel if you don't already. It's free so far. And comment section is open, so feel free to discuss the contents or tell me where I'm wrong or I'm right, or if you have follow-up questions. Just keep it clean and civil. Okay, so this is today's price action. This is the S&P SPY, and you can see pretty wild. If you're good with charts, and we're pretty good with charts, you can nail quite a few entries just right. And if you're good with options, you can nail the close hours ahead of time, and which we did. And we were able to profit a lot from that as well for whoever wanted to play. So plenty of ways to make money in an active market like this, but plenty of more ways to lose money, and I'll tell you why. There's something going on with the VIX. The VIX is the fear gauge. It's this guy right here. And when the markets are edgy, somebody says something, it spikes. So this was the Fed day and Yellen's comments. The Fed day was fine until Yellen opened her mouth and then just created a lot of uncertainty. And they're pricing it out. In fact, it just dropped below 20. VIX is a teenager again. That tells us how comfortable or nervous the market makers are about 28 days out. So if this is calm, it means whatever is going on tomorrow is not going to last for 28 days based on the people who make the rules of options. So if they're okay, I'm okay. That's kind of the thought process for me there. So, but what happens is when this spikes, the calls and puts, all of them explode in price. So if you go to the SPY and you wanted to buy a call or a put, because the VIX is spiking, everything is priced up. And let's say you buy something and price doesn't change and the VIX drops, everything drops. So you're losing money just from that. It's a representation of them taking premiums out from under you. Okay, so why is that important? It's important for somebody who buys and holds overnight. So if I bought calls today for tomorrow and we had a market spike tomorrow and the VIX dropped 5%, initially a lot of my profits are going to be eaten away by this VIX drop altogether. Almost like implied volatility on earnings on the stock. When they report earnings, that implied volatility gets destroyed and a lot of the profits disappear, even if you guessed correctly. So if you're holding overnight, make sure to doubt yourself a little bit. So if you usually take 10 contracts, I would make it smaller because we don't know what we don't know, and we have to leave room for that element of VIX dropping to add or manage the trade. Those who are selling options are doing pretty well if they know what they're doing. I'll give you an example. So today, these are our notes from inside we actively traded the day. I think we had one miss in the morning on a call setup and one stop out on another call setup, but the rest, actually this wasn't a miss. Maybe I'm misremembering them. One hit and one miss. Anyway, I remember we had one or two false start, but then we hit everything else. And all because we know charts and we place lines where they belong. And then we also combined it with our knowledge of options. So within 2 hours of the open, we had already guessed, not just me, several people in my room, out of 320 traders or to 340 traders today, I had at least half a dozen give me their estimates of where we're going to close within 2 hours of the day. That is insanely good. I mean, you cannot believe how strong that is. Anyway, so because we knew where we were going to close on the SPX, we placed trades that won regardless of what had happened, up or down. As long as we nailed the range and we know about where it's going to close, we missed it within $5, some within $2. So they guessed that we would close at 39.73 and we closed at like 39.71 point something. My guess was 75. A few other people had the range correctly within $10. So that is money there. But somebody buying today, hoping that tomorrow would go their way, should consider slowing down the trade. What does that mean? If I usually bet $1,000 on a trade, buying calls, 5 calls or 10 calls, I would rather buy 5 calls out in time for the same amount of money, $1,000, because I don't have as much conviction that I'm going to be right immediately. And if I'm not right immediately and I put all of my eggs in tomorrow's basket, those eggs are going to go rotten in one day. Whereas, let's say they open down tomorrow and they take half a day to recover. Well, if I bought them out in time, that half a day is not half the life of the thing. It's, half the life of the first day, and I have 2 more days to go or 3 more days to go. You see what I mean? So you just have a little bit more time to be correct as opposed to being super correct immediately or super wrong immediately. So lower the expectations. That's one way I get around it. I'm not a super fast trader, but I deliver information for super fast traders, and it's super accurate. That's a lot of supers there. So this video is to basically bring it to the forefront that it's not only good to be right. You have to be right at the right time with options. That's the difference between buying shares and buying options. Time is an element. As soon as you buy options, you're on the clock right away. If you're selling options, the clock is working for you if you do it the way we do. But this video is to remind people that if you're buying and holding, hoping for a move in your way, calls or puts, it doesn't matter, you bet up or down, you have to be right quickly if you use next day's expirations. Intraday, I can help you do it. As somebody, you can learn how to do it to be accurate. Look at the arrows. They were pretty accurate. This last move here gave us a pretty good percentage win. So we expected a move coming from down here, and it came, and then it went to the closing area that we thought. So that is doable. What's not doable is I have no idea where we're going to open tomorrow. I never claim that because I can't see the future. But if you give me dots, I can see the future of the dots based on the patterns. But I don't know where we're going to start tomorrow. But once we start tomorrow, we're going to be able to trade profitably within the day. So this guessing overnight is a killer of premium. So make sure you know that. All right. Hopefully this was helpful. It may sound confusing if you're not actively trading. At least you start thinking along the lines, I shouldn't be guessing unless I have a really good reason why I should hold calls or puts for the next day.